Well, good afternoon, everyone. My name is Andy Tower. I am the new Vice President of International Market Development at the National Pork Board. I've been with the organization about a month now, so I'd just like to spend a few minutes here to introduce myself and explain my role at the Pork Board. Born and raised a farm kid in West Central Indiana, where my wife and our two daughters still live on what was part of my family's original farmstead. Have a little bit of row crops and unfortunately no hogs, but we raise a few horses, and my daughters actively show horses at a national level. Um, Before joining the pork board, I've spent time at Indiana Farm Bureau leading their public policy team. Also spent some time at Indiana Corn and Soybean, working for the corn and soy checkoffs there in Indiana, doing their livestock development work. Been also spent some time in our state environmental regulatory agency. Had a stint with Land O'Lakes Purina Feed, but overall have about 20 years in the ag industry, and really looking forward to joining the National Pork Board to lead the international market development activities and working alongside our friends at USMEF to expand the opportunities for U.S. pork globally. Um, Today, in National Pork Board is a producer-led organization that really seeks collaboration with the industry experts to distribute information to help pig farmers of various business objectives. Today, we'll hear from Dr. Lee Schulz, economist from Ever.Ag, as he gives his expert opinion on recently released Hogs and Pigs report. Additionally, we'll hear from Erin Borror. We'll give an update on the international trade and USMEF initiatives. This recording will be available and will go out in our weekly email newsletter tomorrow. And so as we transition on to the next slide, all the work at National Pork Board does complies with the Sherman Act. The best rule is if you have questions, whether a certain matter can be discussed, clear it with an attorney. I will give you a few seconds to review this statement. Okay, next slide. This is our national pork, or this pork checkoff funds are being used to host this webinar with the purpose of helping pork producers understand publicly available information. The views expressed by our guest speakers are theirs and not those of the National Pork Board. Now I'd like to turn the presentation over to Dr. Lee Schulz.
Good afternoon, everyone. I'm happy to join you once again for a rundown of our quarterly Hogs and Pigs report, just released by USDA's National Agricultural Statistics Service. Before we get to that, just also a reminder that my comments here are strictly based on my opinion of what I think market forces will cause to happen. Again, everything that you'll see here is publicly available information, and everyone should do what is individually in their best interest as they review this information as well as other information that is publicly available. Next slide, please. Before we get into the latest Hog and Pigs report numbers, I wanted to set the stage a little bit about given where some of the fundamentals are. As we look at today's daily livestock slaughter report that was released about 1 o'clock today, we note that year to date, it shows that slaughter is down about 2%. But I would like to ask that question, is it really down 2%? Now, certainly when we look at this, it being a USDA report, it is in some regard, but we have to make some adjustments given how the calendar fell this year. So next slide, please. And so when we look at how the calendar was, there was actually 2 more slaughter days a year ago through June 26th of this year versus last year. And so we had 127 slaughter days last year, 125 slaughter days this year. So a lot of that accounted for the reduction of the 2% in slaughter. When we make some adjustments, looking either at the daily average or using the weekly data that helps smooth out some of those slaughter day impacts, we see that slaughter is only down about 0.4 to 0.6%, again, given how we make those adjustments. Unfortunately, we can't use the monthly data either as we're still dealing with those differences in slaughter days, and that data is always delayed as we're only available through May of this year. So next slide, please. So similarly, as we kind of look at comparisons year over year of slaughter, I always like to make those comparisons to the last Hog and Pigs report. And when we do that, we see that the actual hog slaughter compared to where the Hog and Pigs report was as of March 1 of this last year was very accurate. So we have to give USDA credit where credit is due. They only missed the market hog inventories and the slaughter by about 32,000 head. Since March 1. And really, that's close to a rounding error when we think about the number of hogs that were slaughtered since March 1. And so I think, important to note the accuracy of the last report. And I think that has implications as we look at the next report and where some of those market hog inventories are. Next slide, please. Similarly, I always like to look at weights to see if we're in a relatively current market, if we're pulling some hogs forward or backing some hogs up. I think this market is rather current. If we look at producer-owned hogs as well as packer-owned hogs, weights are only up about 0.5 pound year to date. That's 0.2%. So it's about the average between the producer-owned hogs that are slightly larger than a year ago and the packer-owned hogs that are slightly smaller than a year ago. So I don't think that has really any implications for those market hog inventories as far as backing up or pulling those hog supplies ahead. Next slide, please. Now, also, there's been a lot of questions about disease impacts and potential of disease impacts. Sorry about the smallness of these slides. These are the latest dashboards from Iowa State University when we look at pathogen detection monitoring at a state level. I wanted to highlight these as we do see from a PRRS standpoint, which is the upper left-hand dashboard there. As of June 1, we do see several major pork-producing states that were 3 standard deviations above the baseline, or even 2 to 3 standard deviations above the baseline. That does vary by breeding versus market hog operations, but overall we see positive cases larger from the baseline. Similarly, we see less of an impact from a PDV impact, at least when we're comparing to the baseline. So I think there is still some debate about the impacts of disease. And we'll be able to look at that with the latest Hog and Pigs report at the national aggregate level, but also the state level may give us some implications of those disease impacts. Next slide, please. When you look at the feeder pig prices, though, I think that does suggest, even beyond what we are seeing from a forward curve and the profitability out there, that there's available capacity and finishing space out there that would be driving some of this contra-seasonal behavior. And so, again, I think that's supportive of there is possibly some disease impacts out there that we'll look for in this Hog and Pigs report when we look at the litter rates in particular. Next slide, please. So now getting into the report, I think important first to highlight and thank the 63% of the producers that were surveyed that did respond to the survey. We had a very consistent response rate with the March report at 63%. You can see we continue to see lower response rates, at least compared to the last couple of decades. I think the hope is there we continue to maintain and even grow this response rate higher, as that should help increase the accuracy of the report with more representativeness of producers responding to the report. Next slide, please. And then always before we get into the numbers, I think it's important to compare to any revisions because revisions are going to impact the interpretation of the report. Thankfully, for this report, we did not see very many revisions. So USDA will go back 4 quarters to make revisions. Here, they only had to go back the last 2 quarters. The prior 2 before that were really trued up as far as where numbers were relative to pig crop, official slaughter, death loss, and the import and export data. So when they went back and revised the December 2024 all hogs and pigs, breeding herd and market hog inventories, we did see a slight revision, slightly higher inventory in the market hog inventory. But again, it's very small percentage relative to the total inventory. Similarly, with our last Hog and Pigs report in March, we did see a minor revision upward in that market hog inventory that trues up to the slaughter. But again, a very small revision relative to the sheer number of market hogs we had there. Next slide, please. And similarly, as we look at the September-November pig crop, 2024, we did see a small revision there. All that revision was in the sows farrowing number that was increased 0.3% from the last report. Again, just truing up some of the numbers that we're seeing as far as those slaughter numbers, and we backdating them into the pig crop. But again, I think when we look at the accuracy of the latest reports, really speaks to that. Also, this makes the job of analysts easier as we're not changing the denominator, so to speak, when we're making some of those estimates pre-report. So next slide, please. These are the latest numbers. I'm going to quickly run through these numbers. Reminder again, the inventories are as of June 1. Producers in the first half of June responded to the survey. For the all hogs and pigs number, we had 75.137 million head. This was up 0.3% from a year ago, and slightly larger than pre-report expectations, about a 0.5 percentage point. The breeding herd at 5.979 million head was down 0.5% from a year ago and was down 0.4 percentage points from the average of pre-report expectations. I want to make a note here that usually I consider it a surprise if a number is plus or minus 1 percentage point of a pre-report expectation. And I would contend that's still the case here. For the breeding herd, we did actually see it slightly smaller than the total range of pre-report expectations. Now, the range was pretty small. It was 0.5% when you looked at 99.7% of a year ago to 102% of a year ago, but it was slightly smaller than that range. So a minor surprise in that regard. With the market hog inventory at 69.158 million head, was up 0.4% compared to a year ago, was up 0.6 percentage points compared to the pre-report expectations. This was similar to the breeding herd, was actually larger than the total range of the pre-report expectations. But again, that range was pretty small for the total pre-report expectations. The 180 pounds and over market hog inventory, those are the hogs that we are slaughtering currently, June through mid-July, at 12.941 million head. That was down 0.6% from a year ago, right in line with pre-report expectations. So far, if you look at the weekly data, slaughter's been running about 1.4% below year-ago levels. So it might be slightly high there, but we'll see where slaughter is in the coming weeks, knowing that we have a slaughter. We know that we have a holiday week this next week. Will certainly have an impact on those slaughters. So we'll true those up as we get to mid-July to see how accurate those were with the 180 pounds and over category. The one surprise in this report, if you're looking at 1 percentage point larger than pre-report expectations, was the 120 to 179 market hog inventory at 15.26 million head. Was up 0.5%, but was actually 1.6 percentage points larger than the range of pre-report expectations. This was a little surprising when we look at the pre-report range, though. It was a pretty large range for market hogs that will be slaughtered mid-July through August. So I think the range in that pre-report is just as much of a surprise as the difference in the pre-report expectations of the 1.6 percentage points. The next market hog category, this will be slaughtered mid-August through September at 19.421 million head, was up fractionally compared to a year ago. And then the under 50 pounds, which will be slaughtered October through November roughly, was up 1.2% from a year ago at 21.536 million head. As we look at the sows farrowed, so that's the last quarterly sows farrowed number that's reported at 2.90 million head, was down 0.4% compared to a year ago level. That was slightly smaller than where pre-report expectations were. But when you add a 1.6% increase in litter rate, litter rates were 11.75 this last quarter, you get a pig crop that was up 1.3% at 34.171 million head. Now, I'll note that October through December roughly slaughter during that period roughly aligns with that March-May pig crop. Now, that March-May pig crop also very much aligns with the under 50 pound market hog inventory. So I would say the numbers in these reports very well jive as we look at comparisons of market timing. The last two things to note here from the numbers standpoint, the June-August intentions were 0.4% below a year ago at 2.974 million head. And the first intentions estimate for September, November was released at 2.946 million head, which would be up 0.7% compared to a year ago. Next slide, please. One of the last tables in the report releases shows records, and so I just wanted to highlight some records here. We continue to see record litter rates. March, May at 11.75 was again a record litter rate for the month or for the quarter. The market hog inventory in June was about 2 million head off the record that we seen in 2020. It's a little over 71 million head. Now the pig crop we had in March, May was 34.171 million head. That is smaller than the record pig crop in 2019. However, it's not that far off the record as we continue to see those litter rates contribute to larger and larger pig crops. And so again, we continue the efficiency story of really producing more with less, as we're seeing a breeding herd as small as 2016, yet we continue to push close to record inventories, especially as we look at the pig crop number. Next slide, please. There has been some debate about what that breeding herd inventory would look like. Sow slaughter has been down over 80,000 head since December. That's been down over 10% year over year. But I think it's important to keep in mind we're subtracting from a smaller base. So next slide, please. So our breeding herd at under 6 million head was over 28,000 head fewer than this time last year, or 0.5% smaller than this time last year. So even if you're culling at a same rate, you're culling from a lower base. And so we would expect a little bit lower from a sow slaughter standpoint. Next slide, please. Similarly, we've seen about 28,000 fewer sows and boars being imported from Canada. And year to date, we're seeing overall live hog imports down 1.4%. A big part of that is the fewer sows and boars, as well as the fewer barrels and gilts. So I do think overall we have a pretty consistent breeding herd number with respect to some of the other fundamentals that we're observing here. Next slide, please. The farrowing intentions numbers. So we actually did farrow about 6,000 fewer sows in March, May than intended. I think that was maybe a little bit of a surprise to me, given we did see some increase in, improvement in the financial and economic conditions of producers. But that really came, later April into May. So by that time, a lot of those decisions were made. And so I think, seeing 6,000 fewer sows maybe isn't too much of a surprise. Again, it's pretty close to where we were year over year. And so I would say pretty consistent. Now, we did add 13,000 sows to the June-August farrowing intentions. So that's the second estimate of those intentions. That very much aligns with those improved economic conditions that we're observing, as well as producers are observing. I think incentivizing farrowing a few more sows that showed up in these intentions estimates here. Next slide, please. Similarly, I think that very much aligns with the breeding herd utilization. So as we look at the June-August sows farrowing estimate and compare that to the June 1 breeding herd, we get a breeding herd utilization of 49.74%. That's just below the 10-year average of 50.12%. So if anything, this suggests maybe we will farrow a few extra sows in the June-August period. But overall, I think, again, no surprises with this breeding herd utilization, where the breeding herd is relative to where those farrowing intention estimates are. Next slide, please. So coming into this report, I think for me, the biggest wild card, I think, was looking at where these litter rates would go. I think there was expectation that we would continue to see record litter rates, but at what pace would we see those litter rates increase? If you go back to 2023, we've seen some large year-over-year increases. That continued into 2024, where you started to see some increasing, but at a decreasing rate. Anytime you're breaking a record, it's hard to break a record by a wide margin. And we really defied some of that in 23 and into 24. We've seen those litter rates start to, level out a little bit still, year-over-year increases. And then this last quarter, we did see an increase of 1.6%. And so again, I would say, that did quicken up or increase a little bit relative to what we've seen in December and February. And so it's suggesting that in aggregate, we may not be seeing as large of impacts from disease that we may be seeing in other historical periods. One thing to really note here, if you look back to 2018 compared to today, we've added over 1 pig to those litter rates, just from an aggregate standpoint nationally. Now, obviously, some producers and some states have seen, increases greater than that or maybe less than that. But in aggregate, nationally, we've added over 1 pig growth in litter rates since 2018. Next slide, please. I always like to dig into the monthly numbers to see if there's anything that maybe stood out. And here we can look at that middle column. As far as pigs saved per litter, we did see every month was larger year over year. As you look at March, April, and May, this last quarter here, the largest increase was in April. But overall, they were up over 1% increase year over year, and even 2% in April. Next slide, please. And then finally, one other way we can look at litter rates is look at the state level data. And here, we're always kind of comparing to the nationally. We see a 1.6% increase in litter rates. So above that or below that, would be indicative of differences in those particular states. And so, we've seen some large increases in Illinois and Missouri, for example. And then we've seen some decreases in states, some larger decreases. Maybe in like Pennsylvania, for example, we did see Indiana down 1.3%, Ohio down 2.2%. So and so in aggregate, again, up 1.6%, but overall, we did see some variation across the individual states. Next slide, please. Now, as we look at, what do these numbers mean for production forecasts? These are the latest forecasts from the World Ag Supply Demand Estimates as of June 12th. Their forecast for 2025 production was for a 0.7% increase, and really reflective of, the increases in litter rates, the slight increases in carcass weights, giving a slightly larger production. I think this level of production is pretty consistent with the latest Hog and Pigs report, and we shouldn't see any major revisions to this in the next WASDE release there in July. Now, the second forecast they provided for 2026 production is a 1.3% increase in that production. We started to now maybe get a little bit of the estimates of where we are going to be beginning of 2026. But again, I think the 1.3% is just very reflective of increases in productivity overall, providing a little bit larger production. We could start to maybe see a few more inventory numbers as this financial situation has improved. Next slide, please. So I want to spend the last few minutes here just kind of briefly discussing kind of the changes in markets since March 1 here. So these are, think of these as 3 different price series. So why we see a little bit of variability across each of these price series, but then forecasts and at different times. So we've seen the Livestock Market Information Center, their latest forecast as of June 9th. USDA's Economic Research Service forecast as of June 18th. And then if we look at prices more recently as of yesterday, we can make some of these forecasts and comparisons. I think as you look at 2025, there's expectation of stronger prices overall. From a composite standpoint, about 8% higher prices in 2025 compared to 2024. This would average about $91 per carcass hundredweight. I think there's a little debate about how strong prices are as we get into the third and fourth quarters, is where some of these forecasts really deviate. Where the upper end, more recently, as you look at those forecasts, it would provide a bit stronger, maybe even a double-digit forecast for 2025 overall. And then 2026, I think, as you look at current fundamentals as far as a bit larger production expected, could be a little bit softer prices in that about 5% range or so, kind of back to in between where prices were in 2024 and 2025 at about an $87 per carcass weight average. Next slide, please. So as we look at what this means for profitability, the latest profit estimates are for a 2025 average profit about $23 per head, with a range of about a $3 per head loss that we seen back in January, to some of the highest profits that we're going to potentially come into here during the summer months, at the heights of about $58 per head. As we look into 2026, a more modest profit forecast currently of about $8 per head profit, with a range of about $21 per head loss to about a $29 per head profit. Next slide, please. Costs that really haven't changed all that much as we think about 25 and 26 forecasts. Currently, about an $83 per carcass hundredweight average. Importantly, costs are still over 30% higher in 2025 than they were in 2020. Next slide, please. Now, as we look at the forward curve and look at those profit projections, this is the highest level since 2021 that producers are currently looking at, as futures markets are currently suggesting. Next slide, please. So as I look at kind of the financial situation for producers, and we go back to 2020 to really highlight, how improved situation 21 and 22 were, but then how bad the situation was in 23 and early 2024. It shows you that, we don't get back to break even until roughly August of this year. And so why haven't we seen that many changes in inventory levels, even though we've seen a really return to profitability? Well, I think there's still been a lot of financial healing going on in the industry because of the losses that we've seen in 23 and 24. And the situation has changed rather quickly. If you go back to about 2 months ago, late April, we've seen forecasts that really got us close to break even, and then we would hover around that break even from a cumulative standpoint. Today we're seeing those profits from a cumulative standpoint, starting to approach levels that we got back to in August of 2022. But that really shows you that, our situation has changed quite a bit, but we're still kind of back to maybe those levels in 2022. And so why we haven't seen, I think many changes in the inventories in this last couple of reports is really indicative of what we've seen from a financial situation. So next slide, please. My last slide here, just highlighting, we'll have several USDA reports that'll help us confirm and maybe change our understanding of some of the fundamentals as we go forward the next several weeks and months. And the next quarterly Hogs and Pigs report will be on September 25th. So I thank you, and I'll pass the presentation now.
All right. Thank you, Lee. And thanks again for the opportunity. We're really excited to be working with Andy and always with NPB. And again, just thanks to all the producers for the continued partnership and support of USMEF, your international marketing folks working in these markets on your behalf every day. So go on to the next slide, please. And I'm hoping to just get through a bit of the global situation today, and we have to touch a little bit on tariffs and our top competitors, and dive in a little bit more on the challenges that we're seeing, but also the opportunities, and wrap up a little bit with our forecasts. So in general, on the tariff front, as we look at the situation, there is still uncertainty, but the administration has been talking about tariffs being used essentially for leverage That's the reciprocal tariffs we'll talk more about. Also for revenue, that's the 10% baseline tariff across the board, excluding product from Canada and Mexico that is USMCA compliant. And also to some degree for rebuilding, trying to really shore up, reestablish manufacturing in the US. Of course, there is also the court side of this, and so that introduces some additional uncertainty, but I really just hope to talk about those tariffs impacting us on the red meat side. And fortunately, the challenges have really been limited to China, so that is the good news. There is a little bit of a risk out here with Mexico, and so we'll talk through all of that. For the competitor side, Europe's production is at historic lows, but their exports have stabilized. Brazil is producing and exporting more. Canada is also exporting more. And across the board, our international customers are really still appreciating, demanding the quality, the taste, the nutrient density of pork, and demand continues to be the really positive story here. And of course, for the profitability of the industry that Lee was just addressing, exports do remain critical, and we'll talk through some specific examples there. So next slide, please. As we look at the global trade situation, and the data that's available would be January through April, you note that looking at pork and pork variety meats together, the combined EU 27 is still the largest exporter. Their exports have rebounded somewhat from low levels of last year. And for the US, our exports have slowed down. We'll dive in a little more on what's happening there. And again, Canada is exporting more. They're exporting more outside of the US. And Brazil continues to be a standout. Their exports up 17% and seeing continued growth in production, but also exporting a larger share of that production. And Brazil's top export market is now the Philippines, surpassing their exports to China. We're also seeing strong growth in Brazilian exports to markets like Japan, Mexico. So some of what we consider our markets, we are seeing further penetration of Brazilian product and really a price competitive play by them as they've attained better market access. All right, next slide, please. Importantly for the US, we've been exporting more pork at higher prices, and this has been a multi-year trend now. And in contrast to competitors at certain times where prices have kind of been dropped to keep those export volumes going, where for the US, we've managed to have record large export volumes last year and on higher prices. And that is, again, a testament to the demand for US pork and the combination of strong continued consumption growth in kind of across Latin America in our free trade partners. And in the Asian markets, we had been enjoying a retake of market share from Europe, and all of that dramatic shifting in volumes going from China's African swine fever shortage to their recovery in production and backing off on demand. So there's been, if we recall, this whole shift in trade from especially say 2019 all the way up until we reached somewhat of more normalization in 2023. But through all of that US export pricing, we were able to maintain relative strength. And again, I think this is due to our diversity in markets and really that Latin American demand shoring us up. One other thing to note here is that competitor prices have trended above year-ago levels. And in Brazil in particular, you'll note that they are the value supplier or selling at competitive prices, part of that being currency advantage. But those prices are up significantly from the lows of January last year, and that is also a positive trend. And you note that April price was up 9% from last year. Next slide, please. And looking just at muscle cut trade specifically, the US is narrowly outpacing the combined EU 27 as the largest exporter in the world. And we hope we can hang on to that lead, but we do see some headwinds. So I'm not sure if we end up at the end of the year as number one, but hopefully. And we had attained that crown last year, again, as Europe's production and exports had declined. And Again, Europe is seeing some stability this year, but not really growth. Production remains constrained, and we'll talk about that in a moment. And otherwise, again, seeing that growth, especially out of Brazil, but also out of Canada. Next slide. So for the EU in particular, I just wanted to show their top markets for some perspective. And because, or since the UK left the EU, the UK is their largest market. As you see, those China volumes remain well below the, again, ASF-driven shortage. But Europe's exports to China have been rebounding. And China recently extended the anti-dumping case that they've been working on for European pork. So at least for the moment, Europe is seeing maybe some stability in access to the Chinese market, in contrast to the US and in contrast to Canada. Canadian pork is also at a 25% retaliatory tariff going into the China market. Otherwise, some softening in shipments to Japan and some stability into Korea and the Philippines, but also a bit of a slowdown. These are markets where Brazil is coming in as the affordable or cheaper supplier. And we can kind of contrast that with the situation in, for example, Australia, Malaysia, Taiwan, where Europe is competing quite well, and those competitors would be US pork and Canadian pork. So really some variability depending on the market. But again, for Europe, generally, in the next slide, we can see, go ahead, yep, that their production is at historic lows, but not declining further. Just kind of looking at stability after peaking all the way back in 2022. And it's still pretty stark to look at that essentially 28 million head decline in Europe's hog slaughter, and a significant, again, just kind of reset in the industry. And you'll note this slide goes all the way back to, or the chart goes all the way back to 1990. So historic lows. And if we were looking at production, it would also be the lowest in decades. But if you look at the hog numbers, again, looking to some stability there, and their production this year is up kind of a tick, but again, at historically low levels. So we're not seeing any further big change out of Europe at the moment. Obviously, they're dealing with African swine fever, and then also new this year is the foot and mouth disease. That seems to be contained for now. I think it is a stark warning to all of us. Seeing foot and mouth in Europe is, alarming, and again, makes us remember it's not only African swine fever, but also foot and mouth and foreign animal disease in general that we must remain vigilant about. But also the regulatory cost situation for European producers. And when you talk to them, it's not only the regulations at the European Commission level, but also individual member states. And it's also just the pure uncertainty about what happens next on these regulations. There is maybe some optimism because of the new commission and their focus on simplification and cutting red tape. I think it remains to be seen how much of a difference that can make for these producers. But in general, again, just kind of looking at some stability out of Europe's production and exports for now, okay? One other big change that we've been kind of watching and waiting for is Brazil's disease status. And Brazil had applied to the World Organization for Animal Health last year for foot and mouth disease free without vaccination for the entire country. And at the May general session of WOA, they did grant Brazil this access. And if you click to the next slide, we can imagine where this may change things for Brazil. So first off, countries don't necessarily adopt the WOA status immediately or automatically. Countries, including the United States, APHIS will go through its own process and decide which states it will actually grant that status and therefore expand access for Brazil. Many other countries are similar, so this is not automatic. But as countries adopt this expanded access for Brazil, what we can imagine happening is that instead of having production concentrated really in those southern 3 states in kind of the blue shade there, which were more than 73% of production last year, having expanded access and status should allow production to increase more in the central west of the country, and we're in the grain producing regions. And so I think, again, over time, this could be a big game changer for Brazilian further production and export growth. The other thing that is noteworthy is really in similar timing as the granting of this improved status was Brazil's first case of high-path avian influenza in a commercial flock, and that was somewhere around May 19th, just ahead of the WOA session. Brazil's the largest poultry exporter in the world. They're also the largest beef exporter, largest soy exporter, and they are still number 3 or 4 in pork, depending neck and neck with Canada. But 5 million tons of poultry exported were being impacted. Brazil has amazing quick recovery in access. So several countries have already regionalized or accept Brazil's regionalization and resumed at least partial imports of Brazilian poultry. But that is still a factor that we're watching, including in markets like the Philippines, which are really reliant on that Brazilian poultry. And that's part of the reason we are cautiously optimistic about further growth, like for US pork exports into that Southeast Asia region. All right, next slide. So shifting gears a bit into the tariffs, I am showing on the left side of the screen our top export markets and the tariff imposed on US pork going into these markets. And you'll note that many of these countries are at 0 tariff, which means they're generally free trade agreement countries. This has been a huge success story for the US pork industry, and really what sets us apart from Brazil, for example, who does not really have free trade agreements. And again, the good news is that the retaliation is really limited to China with that additional 20% on US pork. That tariff was 172% total on US pork before the Geneva joint statement that was reached in May, on May 12th. But now that tariff is currently 57%. Also have to mention that Canada has a 25% tariff on US sausages. That sausage trade is valued at $275 million. That was the value last year. So it is a really important, impactful retaliation, but fortunately it's just that across the board tariff from China and then the sausages going into Canada that have retaliation currently. And then on the imports coming into the United States, on April 5th, the reciprocal tariffs were imposed. So there's the additional 10% that is being tariffed on imports coming into this country. And that does include the pork that's being imported into the United States. The exceptions are Canada and Mexico. So again, fortunately, our trade within USMCA was exempted from those blanket across the board tariffs. And we've also noted those supplying pork into the US that have tariff or that do not allow access for US pork exports into their markets and or have high tariffs. And so for the EU, Brazil, and the UK, Brazil, we have no access. EU and UK, we have very limited access. So this is where the reciprocal leverage is hopefully being used to expand access for US pork. Okay, next slide. And again, not to get into the details, but there are several countries, some of which are listed here, have the threat of higher tariffs. Again, this is under the reciprocal framework, and that deadline is July 9th. So when you hear about the ongoing negotiations with many countries, these are some of those countries that are currently negotiating with the US to try to remain at the 10% tariff rather than facing this higher tariff across all of their trade or exports into the United States. And so as industry and in working closely with NPPC, we've been providing insights on which SPS or non-tariff barriers and which tariff barriers need to be removed to further grow US pork exports into a whole number of countries. Okay, next slide. Of course, there are several tariffs also in play, and so just wanted to mention quickly that for steel and aluminum, those tariffs did escalate to 50% on June 3rd, and autos and auto parts are at 25%. And importantly, many of our top export markets are countries which supply autos and metals into the United States. And so Canada, Mexico, Japan, Korea, these countries are also, working on trying to reach agreements on metals and autos as well as reciprocal. Okay, next slide. So you probably heard about the UK agreement being announced, and this is one market where we have really tried to advocate for improved access for US pork. And in this case, it's a combination of course, of tariff and non-tariff barriers. And it's pretty stark that the UK is the only top import country of which US has, less than 1% market share. Next slide, please. And we can see in their prices for UK on the hog side, they're at sharp premiums, not only to US prices, but also to the EU price. And there is a concern about food security in the UK. They rely essentially entirely on the EU for their pork imports, and there are opportunities for US pork in this market if we can reduce some barriers. Next slide, please. All right, for US exports, again, for the first 4 months of this year, our exports held relatively steady in, kind of in one way, given all the challenges, but a 5% slowdown is not nothing. And you'll note that China is a big part of this. Continued slowdown to Japan, where the relatively weak exchange rate has still made them really a price-driven market, which is a complete change. Also, a sharp decrease into Canada. The tariff uncertainty has really impacted our trade into Canada, and that doesn't even yet reflect an impact of the sausage tariff. But our exports to Canada really plummeted in April with all of the tariff uncertainty. But continued growth into parts of the world like Central America, South America, and again, optimism for some increased volumes into Southeast Asia and markets like the Philippines. Okay, next slide. So again, I just want to jump into the details on China right quick before we wrap up. Our exports to China are about $8 per head. Go ahead to the next slide. This is almost entirely variety meats, and China is the dominant destination for our feet, our stomach, our head items, and there's really no alternative to the China market for these products. And for the exporters, go ahead to the next slide. They are now looking at a situation where the tariff going into China could ratchet up again at the end of this 90-day detente. So about August 12th, there's risk of the tariff increasing again. And remember, we were at 172%. That quick escalation meant that a lot of product was kind of stranded in the pipeline, produced specifically for the PRC, had nowhere else to go. It was a complete disaster until the Geneva joint statement, which enabled tariffs to be reduced and then the trade to, flow on into China. So the great concern about that happening again means that some of our packers will stop producing and exporting these variety meats to China in the coming days. And we continue to seek some certainty on the China front because, especially as we move into larger kills this fall, we cannot afford to not have that market to ship this offal to. And there's the risk of, rendering capacity if we don't have the China market. Next slide, please. We continue to look at alternative destinations outside of China. And so, for example, we look at their European pork variety meat exports, and the Africa market is noteworthy here. Of course, Africa can't pay the prices that China pays, but that is the region where we're trying to learn as much as possible. And Matt Copeland in our office down there, along with Chad, are working with the exporters to try to best understand what may be possible as far as, an alternative market. Next slide, please. And the China situation, I'm just going to wrap it up as China's prices are stable and relatively low. And this is large producers in China continuing to produce more. So more commercialization, more professionalization of the industry, more stability, but plentiful pork in China. Next slide, please. There is a risk in Mexico. As I mentioned at the beginning, this is potential retaliation if the US imposes tariffs on Mexican tomatoes. This could happen on July 14th. That's what's been announced by Commerce, and that would be a 21% tariff on about $3 billion worth of Mexican tomatoes coming into this market. President Sheinbaum in Mexico has said that pork and poultry would be on a potential retaliation list. So we are hopeful, optimistic that something can be worked out so that U.S. pork does not face this challenge in Mexico. When Mexico retaliated on U.S. pork for the metal tariffs back in 2018, it cost our industry over $1 billion, and that's reduced prices for hams and also just reduced volumes into Mexico. Next slide. And we also have a new entrant in the Mexican market, and that's Brazil. That's a change from what the situation back in 2018. And Brazil is, making headway into Mexico as Mexico continues to diversify its suppliers. But the good news in Mexico is that Mexico's hog prices remain relatively strong. We continue to see Mexico's demand for U.S. hams and pork across the board. And so the Mexican market remains absolutely critical for U.S. pork and continues to really pull our product. Next slide. Let's go ahead to the next one. So finally, for our forecast this year, we are cautiously optimistic that we can end the year down, I would say, close to 2%. It really does depend on largely what happens with China, and assuming no further deterioration in access, which would be no further deterioration as far as retaliatory tariffs. Okay, next slide. And again, just to remind all of us that the export dollars per head at 67 last year was a record. We're 65 so far this year, and still exporting close to a record share of production. And exports remain critical in the next slide to maximize these carcass values, and just emphasizing that, especially for kind of the end cuts, the export markets are dominant, and that enables our American consumers to enjoy all of this bacon and kind of middle belly rib items that are preferred by Americans. Thank you again.
Excellent. Well, thank you, Lee and Erin. As always, a wealth of information, and appreciate you all joining us here today. As we do conclude, I'd like to talk directly to all of our producers, leaders out there. On behalf of all the staff at National Pork Board and our board of directors, please know we are working tirelessly to continue to build your trust in and add value to the quality and safe product that you produce. I look forward to working with all of you. Please scan the QR code on the screen to stay up to date with pork checkoff throughout our weekly email. And again, thank you all for joining us today, and thanks to our presenters for the great information.